In running any successful organization, you're constantly moving between three different things: culture, strategy, and execution. Many companies come out and they talk only about their culture. But what the employees want to know, what their clients want to know, what the market wants to know is, do they have a viable strategy? And you use the core cultural values to guide you on that path.
Troubled financial giant Citigroup may be breaking up.
Citigroup confirms it will sell a majority stake in its highly rated Smith Barney brokerage unit into a new joint venture to be run by Morgan Stanley.
The Smith Barney deal happened literally right in the midst of the crisis. There was such a narrow window of opportunity to actually pull that off.
At a time when competitors were retreating, we were actually advancing our market share.
It was enormously risky. I mean, it wasn't risky in the sense that we were doing a big bet. Gorman knew the business, understood the benefit, but during a financial crisis, you do a big M&A transaction.
The financial crisis created an opportunity. And they say never let a good crisis go to waste. Well, we didn't.
For James Gorman, now in line to become CEO, acquiring Smith Barney was the opportunity he had been waiting for since he was tasked with turning around the wealth management business in 2006.
The wealth management business gives you stability. It means you're a little slower in the water because you're dragging all this ballast. But the beauty of ballast is it means you're not going to tip over. And I thought that having that stability attached to the strength of our securities business could be a true knockout combination.
The Smith Barney acquisition, which took several years to complete, doubled the wealth management business and created the country's largest brokerage.
The goal was very simple: create a business that half the revenues came from an institutional business and half would come from the wealth and asset management business.
It would radically alter the business mix of the firm and was part of a larger plan to reshape Morgan Stanley in the wake of the crisis.
The question was, how do you take a group of people who've been successful for so long and justifiably proud of what they've done and say, we just can't keep doing it that way? We had to fundamentally change.
He was very articulate and prescriptive about what needed to be done, what had been done, what was left to do, and where we were going.
We wrote off and got rid of many assets on our balance sheet.
We founded the Global Sustainable Finance Group to really lean into where capital markets and environmental issues and social issues went hand in hand.
We also made the decision to right-size our fixed income and commodity business to reduce our risk-weighted capital.
We brought in a management group working together as opposed to what had been there, which was this sort of silo-type mentality.
And we got back into investment management in a bigger way. So there was a lot of wood to chop.
To be doing a couple things at once that are transformative, that have different constituencies, that's not an easy feat to pull.
And many on Wall Street weren't buying it.
The whole rejigging and reshaping of the firm was against the backdrop of uncertainty about whether the strategy made sense or not.
The markets were resetting, and we underperformed quite dramatically because there was not a desire to take a huge amount of risk.
There was so many questions. People were saying that we made the absolute wrong decisions.
People were questioning the change in strategy and whether or not we could pull it off.
And I felt like that book, The Polar Express. I said, why can't everybody hear the bell and just get on the train? I don't understand it.
We just kept saying, this is the right thing for clients, this is the right thing for the changing world, and time will tell.
But in the beginning of 2012, a new threat emerged.
Moody's, in their wisdom, decided that they needed to reevaluate the rating of Morgan Stanley. I saw this as an existential threat.
Moody's and the other rating agencies had gotten it wrong before the crisis, and Morgan Stanley's near collapse a few years earlier was now a serious concern.
What they were considering was downgrading us 3 notches. That's a lot. In our case, it was catastrophic if it happened.
We would have been basically viewed as a junk credit. And if you're a junk credit, then nobody will lend you any money. So it was pretty dire.
We met with Moody's, I think 11 times I met with them. We were trying to impress upon them, You might destroy a great institution after we've survived the crisis, after we've made all these changes, simply because you don't believe these changes will succeed. I thought that was grossly unfair.
In the summer of 2012, Moody's released its new ratings.
I was in Russia, and I was in my hotel room at 1 in the morning, I think it was, and I got the call that they downgraded us 2 notches. Who knew we could be so fortunate? So I decided to go down to the bar and buy a celebratory drink. And then I turned around and our whole Moscow office appeared. It was one of the kindest and nicest things that I've ever experienced. And it also said so much about our culture that they understood the gravity of it and they wanted to share in the moment.
Another big report from the financial sector. This time, boom, it's Morgan Stanley.
Clear strategy and executing on that strategy.
Return on equity, though, did fall a bit, but the model seems to be working in terms of wealth management.
We always used to say, quarter after quarter after quarter of just clean, good business, and eventually that trust would come back.
Morgan Stanley beats expectations with its results, like other financial firms.
Management figure. That is something that James Gorman has really turned this bank around.
This looks like a strong result from Morgan Stanley. They look good on expenses. They look very good on revenue.
There's nothing that drives culture more than winning. And so as the progress took hold, I think the belief started to grow.
We posted 8 straight quarters of profitability. The list of problems was getting shorter and shorter, and we kind of felt like we had our mojo back.
This time we got it right. This time, all of Old Dean Witter, all of Smith Barney, all of Morgan Stanley all came together with integrated platforms and a cooperative, cohesive culture.
We have this fantastic retail distribution capability. We are now 50% asset management, wealth management, 50% investment bank. That's what we wanted to do.
The Morgan Stanley of today is #1 in equity sales and trading, a premier investment banking franchise, a well-structured and well-sized fixed income business, and we continue to be a big participant in global market flows.
I think the firm's foresight to invest in China, invest in Asia, invest in Europe really has paid off in spades.
We've taken a fundamentally different approach to sustainability. We don't think it's sort of a boutique or a silo or something lovely off to the side. We really weave that through everything that we do.
The firm is one of the true leaders in the world in financial services, and I think the future is incredibly bright.
The last decade has been an incredible journey back to where we were. If you think about, we were on the edge of out of business, and here we are today, one of the leading firms in the space. That's an incredible accomplishment.
In 1935, Henry Morgan, Harold Stanley, and 4 other partners came together at No. 2 Wall Street. They could never have imagined what their tiny investment bank would become 85 years later.
It's truly global. The beauty is that everyone's connected. You want to do a deal in Thailand, in China, in India, in Europe, they pick up the phone, they call someone, and you can get to pretty much anyone, anywhere.
The only way it works is when you have a whole map, because that's when you're credible. That's when you're able to really serve your clients properly.
Through 85 years of change, one constant has defined the firm.
Morgan Stanley people believe in the values. We live those values, and that makes you different.
To me, it is the competitive advantage of Morgan Stanley. To me, it is the singular reason we survived.
When I talk to a client that says they really trust me to put their interests ahead even of our own, that is the core of what we do.
There's no boundaries to our thinking and our way to innovate and deliver for clients. We're going to bring the best, we're going to bring the brightest, we're going to be the most creative.
Morgan Stanley is always with its compass pointed due north.
Every employee from the day you walk into this building thinks about giving back. And it's a really
beautiful thing to watch.
Healthy Cities,
Global Volunteer Month,
Morgan Stanley Children's Hospital, Feeding America, the
Healthy Futures Fund.
It never ceases to amaze me just how impressive that contribution is.
The people that we employ today are very different from those that were at the birth of this company. And this is one of the outstanding results of this firm, which is we've been able to grow and yet be beholden to some very clear and simple cultural traits.
I've been here for 25 years, and I've hired a lot of people, and I've seen a lot of my colleagues leave. Many of them come back because they realize that this place is special.
Listen, what brings you back here are the people. There's nothing more important than the people. It's the people you work with. It's the culture, it's the excitement, it's the deal making, it's the ups and it's the downs.
It's an authentic place. The people with whom we work, that has been the special sauce that makes us different.
Partnering, winning together, challenging each other, making each other better at what we do. Any other place would just be a job.
The surveys that we ask of our employees, I didn't want 100 questions on the survey, I want one. At the end of the day, do you go home and tell your family and friends, I'm proud to work at Morgan Stanley? That's the essence that captures everything. What I want to see are the people who 10, 20, and 30 years from now take these values, adjust our strategies, they will have to, maybe radically, and take our values and set this firm up for the next 10, 20, 30, 85 years of success.